Hey, and welcome back to Bitcoin Advisor Channel. My name is Chris, bringing it to you here from Westlake Village, California. It was a cool 44 degrees, and I am going to wish you all a blessed and highly favored day and a great start to your Monday, because yes, it is the beginning of the week, and it is a new week with new opportunities. And we're going to talk about kind of some of the weekly time frames. We're going to talk about these CME gaps. I might even throw down some gold and silver because they got smashed pretty hard as the dollar put in just a little rally. So that's the first thing I want to touch on, following up from last week. And we did say this actually last week when this confirmed that at a minimum, we're looking at a shot up to the 21 at the first target. And the second target actually is going to be up in the middle of this green box of peace and prosperity and death and despair. And why did we foresee this coming? Well, it was simply put the hidden bullish divergence. And we work off something called the 4-drive philosophy. And what is that? Well, hidden bullish divergence is this. When you have price making higher lows and the RSI making lower lows, 1, 2, 3, confirmed lower lows in RSI compared to this point right here, right? So that's why we've identified this really quick. And by the way, if you want the cheat sheet on hidden bullish and bearish divergence, all you got to do is email info@bitcoinadvisors.com. We will leave a link in the description so you can start to figure out what is that bullish and bearish divergence that everybody talks about. It is significantly important, in my opinion, to learn, start sooner than later, because it's going to take you a while to get it. In the complex world of Bitcoin and macroeconomics, we are here to give you a bird's eye view from the macro level down to the micro level. We're going to marry the two together and let them have a little baby and give you the best education we can every single day. I hope you enjoy the video. But yeah, look at this creeping up out. If we get out of the bullish control zone from a low level, anyways, I am looking for that to happen. Okay, so what is my point here? We got 1, 2, 3 drives, and that gives us a target of the 21. Now, this is not like a guarantee. This isn't financial advice. This is just something I work off, my own trading strategy. And if you care to, join us and learn, well, great. If not, don't worry about it. But with that opinion, our opinion is, look, when the dollar goes up, risk assets go down, and vice versa. When the dollar goes down, risk assets will go up. What else do I want to point out is the declining volatility. So when volatility is declining, you expect a mean reversion bounce, and that is essentially a bounce in the opposite direction of the trade. So as the dollar's been coming down, when volatility expanded, right, getting into the critical zone, as it contracts all the way back down, right, we expect the dollar to rise back up. And I would not be surprised for this green box to get hit. And in the short term, that could mean, some downside of the pullback we were talking about for Bitcoin, down to the $20,000 region that we've been hypothesizing, right? Saying, hey, look, we want Bitcoin to come in and hit a higher low. Something else I did want to point out is that we did hit the 24.5 target on CMEs last week, not on spot price action, not quite. Close enough is close enough. One of the subject titles to the video was 24.5, right? And that, 24.302. Again, close enough is close enough. And just, following up on CMEs here. So what do we have? We still have the weekly, why do I have this box drawn in here? Well, there's a gap there and there's a gap there. And if you're watching this video and you care to like and subscribe, do so. But I'd also appreciate a post in the comments. Do you think, this gap gets filled first or this gap? And something I heard this morning was that, hey, gaps have a 93% chance of getting filled. Now, what does that mean? What does that mean? Well, does it mean they get filled right away? No, obviously not. This gap came back from, that gap was coming in May of 2022, almost a year ago. And this gap just came in a couple weeks ago, right? 1, 2, 3 weeks ago. So here's what I would say is just a tick below 22,345, and I'm looking for this green box to get tagged. Well, at a minimum, the 9 at 21,000. That could very well happen in the short term, and perhaps put in the opportunity for a higher low on the daily time frame. So what else would we line this up with? If this does confirm as a local high, there's going to be several drives of hidden bearish divergence coming back from this pivot right here. And that's the area we need to take out if we want to even talk about some kind of a reversal. We want to see this area get taken out. And then high low, and then this area get taken out. And that could be, you know, one of the ideas for a macro trend reversal. All right, I want to make these videos short and sweet. Do I have anything left that I want to say on Bitcoin? I'm going to update us on the daily time frame. On the daily time frame, what do we have here? What do we have here? Well, again, what did I want to point out? Oh, yeah. There is no daily death or golden cross yet. So this is kind of the last piece of the pie, the puzzle for me to want to see the macro low be put in. One, we want to see a high low in the weekly time frame. Two, we want to see volatility expanding from a very low region on the weekly time frame, which do we have that here? Well, it was expanding, yeah, from a low region right here. Two, we want to see the blue buy signal on the hash ribbons indicator, which we did get on the weekly time frame. And four, we want to see, oh yeah, two things are missing. And I forgot, there's now 5 pieces of the pie of the portfolio, 5 pieces of the pie that need to be fulfilled for us to declare the macro low is in. And what is that? The fourth one is the golden cross on the daily time frame, which is going to be this guy right here. By the way, if you want to learn how to trade and set up a trading view and get all these fancy indicators, you can do it for free by clicking on the link in the description below. All right. Back here. So golden cross, we want to see these two cross to the upside, the purple and the green 55. That's the purple 200 and the green 55. That was a death cross. This was a golden cross. That was a death cross, and this was a nice golden cross, okay? The fifth piece of the pie of the portfolio, I don't know why I always say that. It's not a portfolio. It's a recipe for cookies, okay? If you want to make the right Bitcoin cookies, you need to have all 5 pieces of the pie of the portfolio. Just kidding. All right, back on. Crossing to the upside. The last thing is the crypto fear and greed index. We want to see extreme fear get hit. Capitulation. Where max fear, max pain, where everybody sells their biscuits and calls it a day and says, no more Bitcoin. I give up. I throw in the towel. Did that happen over the last few months? No, it didn't. Look. The fear and greed index did not get into the extreme fear zone. That's what we want to see. And if you go back and backtest these extreme fear reads below 10, you want to see it held for some time, essentially, like this. That was March of 2020. What do you know? Coronavirus dump time. August of 2019, willing to bet. Let's just see. What was August of 2019? Bitcoin price action. Let's see. Was it here? December, February. That was March of 2020. August, February. Oh, March, April, May, June. Oh. August. I wonder what the fear zone maybe that was a wrong read. Let's just double check that one. I think actually what happened back then was the Chinese government announced they're banning Bitcoin, something like that. They do it every couple of years. Anyways, point is that extreme fury. Let's try another example. 2018, November 2018. Let's see another November 2018. Oh, that was December. Oh, what do you know? See, November 2018. This big red candle right there. Actually, it was November 30th. So it would have been this one right there. I remember that day. I remember trading Bitcoin that day. Anyways, I'm 10 minutes in the video. Better jump onto something new and talk about, what's likely to happen on Bitcoin on the daily time frame here. And look, we did say this also last week. We said, hey, look, crossing down from the critical region, if we see volatility expand, we're expecting a 20% move. How would I define expansion? We want to see the BBWP, this moving average, get a positive slope, and the blue line get above 20 percentile, and I would define that as expansion. Expansion, that's what we want to see, and that should precede a 20% move in the direction of these stochastics. These stochastics will remain down as long as Bitcoin is below 24,000 on the daily time frame. 12-hour is down below 23.5, 10-hour 23.3. We don't need to see them all. 4 hours popping up. How's the 4-hour doing? So after being away from the bearish control zone for some time, we just got kicked back in. So just like the bullish control zone, I'll point this out. You're away from it for some time. The first time back in is a sell. Okay? Same thing with the bearish control zone. First time back in there is a sell. A buy. Okay, second time in there. Okay, now we're stuck in there. The bears have control, and I would say the Bitcoin bears have their giant red lightsabers out, and they are ready to take people down, about to get the silver cross to the downside on the 4-hour as well. So look, first cross down doesn't usually get the move. It's the second one down. Now, what does Bitcoin's price action like to do very much? It likes to give you these little fake out pumps where you think it's going to cross down, and then it doesn't. It doesn't cross down. So it's pretty close. Here was a good example of a cross down. So first cross down, had a pretty decent move. Second cross down, decent move. Anyways, so on and so forth. The 4-hour silver cross looks like it is about to happen, but we could easily see this smooth out and be another higher low, be some hidden bullish divergence. How would we confirm this as hidden bullish divergence? I'd want to see a closure back above. I would say this pivot right here, 23,429. Any kind of a closure back above here, and I'm looking for another drive into this box here. Now, something else I want to check on is the 5-day, which will be closing another 3 days and 9 hours. 5-day will be closing soon. 3-day looks like it's coming down. 2-day, 2-week. The weekly. Yeah, so if we lose this area here, we've been having this 22.3 target. If we lose that area, even on a 4-hour, I think, price action will start to move to the downside, rather swiftly. How would I mediate that, guys? Look at the dollar, right? Okay, again, the dollar we've been talking about for some time. We're getting liftoff. Volatility is beginning to expand here. Out of the critical zone, the opposite read. Notice, if we flip this up and it was up here, right? It's an opposite read. And very similarly here, this is like, I think they call that the 3 little soldiers. If we close the day, anything like that, I would expect one more day. Continuation to the upside. 2-day. The green 55 coming in play at 105.19. And as the dollar rallies upwards and onwards, you'd expect risk assets to go down. Also, note there is a little gap here as well on the 4-hour time frame for CMEs at 23.4. So if we pop back up there and reject, that's probably going to be a good signal that we are going to be playing out the downside move to this green box of peace and prosperity or death and despair. And hey, look, if we start to close below there, warning, warning, warning. Battle stations must be hit. Actually, this is really the line in the sand for me at that 18.5 to 18,000 region. I'd be waiting for this area to get shattered and then, you know, probably looking for some more downside, probably. All right, 15 minutes into the video, time to cover some other coins really quick. Ethereum looking stronger than Bitcoin, I'll tell you that much, but we'll be crossing down on the day below 1650 today. So critical day for Mr. Ethereum's. And I just want to look at the CMEs. So this is, yeah, they got the same gap coming down here. Little gap, little baby gap. And this does look bearish here. 3 drives of hidden bearish divergence. Price is making higher highs. RSI is making lower highs. And actually coming back from this critical region right here, yeah, it looks like, you know, any kind of a closure, I'd say below here on Ethereum. Daily closure below the yellow 21, very likely plays out a nice, swift downside move as we will have, coming back from this pivot, right? 1, 2, I don't know. I'd basically call this 2 drives. 2 drives. Actually, you could use this pivot right here, get a couple more in there. No. Yeah, so any kind of a closure below 1556, first target 1437, second target 1318. Okay, now again, we did put in a nice monthly higher low, yeah, monthly higher low. And we got a lot of work to do to put in a higher high for Ethereum, $3,300. I think still, guys, we're not out of the woods. Let's take a look at NASDAQ real quick. And we did call this one out last week saying, hey, look, very, very likely Mr. NASDAQ's going to come up to this level right here. Second target, it'd be 13,557 based off of the hidden bullish divergence. And we did call that one out, confirmed on this closure right here. Volatility expansion, Stokes are up above 11,460. So it really depends on what the dollar is going to do. And, you know, really we could come back down, retest this trend line, and then get the shot up here. It really depends on what the dollar does. And I will say this, on the economic front, the schedule of fees, the next CPI print coming up on March 14th, right? So is inflation going to be lower than expected? According to the Fed and everybody else out there, they think inflation's going down to 2% in the short term. I mean, we're talking probably in the next couple of months. Inflation going down to 2%. I don't believe it. Even when they told us inflation was at 2%, it wasn't. So wake up, smell the coffee, let reality set in. Don't believe the flapping jaws on the TV, okay? Period. Crypto bubbles, let's check in here for the day. Render up 15%. Another one I've seen, yeah, Render is consistently in the green over the past few weeks, along with Apt, wherever that one was, Theta, DYDX, another strong one, 4%, Synthetics, GRT, yeah. So just checking in on a few of the majors that are popping up today. Again, Fear and Greed Index is still pretty high. You know, we are over the year. People are the most greedy they've been, well, since, yeah, going back to this level right here, March of 2022. So people are in the greedy zone. What is the old saying? When people are greedy, it's time to be fearful. Okay. I also want to pull up open interest here. This is all the leverage positions on the board. Hey, if you want to email my personal email, there it is. Just kidding. Okay, so open interest is still climbing. Again, open interest is the purple line, and for a 20% correction, we want to see open interest get up to, I'd say, around 8-9 billion, 10 billion, 11, 12 billion to be more, more accurate. So more leverage needs to get added to the system for another big downward swoop. That's what I would say. Funding rates, where are they? Now, what else I could add to the piece of the pie of the portfolio for a macro low to be put in is we want to see funding rates at not 0.1%. Come on. Load me up, Scotty. Load me up. It's 8 o'clock, the hourly closure. Do we have any trades up on the hourly? Let's see. Let's see. This could be done. This could be done. This could be done. Oh, Dan Held had a great quote this morning. He said, if your financial advisor hasn't recommended Bitcoin yet, fire him. Bold. Bold as a lion. Good job, Dan. You tell him. You tell him. So that is what I want to see. Not 0.1% for a macro low to be put in. So was the macro low in here, November? That's part of the piece of the pipe. So we did get that not 0.1%. Essentially, funding rates when you're this is a hard one to describe. Okay. So when funding rates are positive, you are paying to go along, right? When funding rates are negative, you're paying to go short. I think I have that right. When funding rates get, look, what do you know? Not 0.1%. Yeah. The last time that happened was November 9th. So let's look at price action on November 9th, just for a little history here. All you students out there that are beginning to get some training, you better write this down, okay? Funding rates get a 0.1% on either side, positive or negative. Typically a low or a high is going to be put in. Oh, 23,000. Bitcoin picking up. And I want to look at Adam really quick. Adam on the weekly, on the hourly. 1456, struggling to get back up above that green 55. But, yep. Anyways, back on to Bitcoin on November 9th. That's what I was talking about. Bitcoin on November 9th, the daily. So, what do you know? Big bottom put in. What do you know? Maybe that TA stuff, maybe the underlying market dynamics do play in to Bitcoin's price action. Maybe it's not just all manipulation. Anyways, not 0.1%. Part of the piece of the pie of the portfolio. So we did get that read. So I would say I'm going to move that up above extreme fear on my list and right below the hash ribbons indicator. That's interesting. Okay. I think that's it for me. Checking on gold, my golds. All right. So we did make a video about gold potentially hitting 2,300. How do we get mediated? That we said we need a closure above This pivot at a minimum, 2,000 an ounce. Right there. Daily closure above there, yes, 2,300 is in the cards. However, you'll notice what was just printed. Hidden bearish divergence. Price making a lower high, RSI making a higher high. Yeah. So what does one drive? Gives us a move to the 9. We already got that. It's already played out. So lower high here. Higher high here. What are these guys making noises out there? I have to go give a meeting right now. It's time. My time is up. So that is your first drive. Now the good news is we still can play out some upside because we want to see multiple drives of this. Yes. Multiple drives. So on the other side, so we're just looking for the higher low, right? The higher low on gold. Where do the higher lows come in? At the 0.5 or the 618, somewhere around this region right here at 17.8. Okay. That's all I got for you on gold today, guys. Silver getting smacked down as well. And same thing, looking for the higher low somewhere in this region. Actually, right around here, you know, prior support becomes resistance. Support becomes resistance. Support becomes resistance, and resistance becomes support. So as we broke back into this channel right here, right, we had this massive channel. I'm just going to put this down here. Massive channel. Breaks it. Okay, boom. We break back in and could be targeting a move all the way up there. So very, very nice for Mr. Silver. Ooh, palladium getting shot on the chin. Not looking good. But I do like this one for a big bounce. Why? Why do I like this one for a bounce? As long as we don't take out this area. Let's see. What else do we have? I want to see on the VPR here. Yeah, massive support there and here. You know, if we start to lose this region right here, yeah, big leg down, big leg down. But I personally think we're probably going to get a bounce here. This one is a bit interesting and does tend to trade in its ranges over years of time. So I'll go back to when I was trading palladium at first pass. There was this massive range here. I would say it was between, 400 and like 200. And, you know, we've had several good plays between 400 and 200 for, you know, a couple of years. And we just broke out of the range. Now we're heading back up to the top. And, yeah, this is going to be major support here. So, yeah, big downside risk still, but I do think kind of the new range established on palladium is going to be somewhere between here and here. So could we get a couple more swings between 2,800 and 1,500? Yes, I do think so. All right. I think I did enough. I covered enough. Hope you guys have a blessed and highly favored day. We'll be checking in tomorrow with some more updates. Take care.